Good morning, and welcome to the Leap Podcast, your concise, level headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, 23rd of January, 2026. Fresh off the World Economic Forum's annual meeting in Davos under the theme A Spirit of Dialogue, where crypto tokenization and stablecoins took center stage amid high-profile discussions and President Trump's special address touting America as the crypto capital of the world. The market remains under pressure with broader macro headwinds and ongoing liquidation cascades. Let's leap in. A key volatility driver this week was the intense but short-lived Greenland saga. Trump's aggressive push to acquire or secure greater US control over the Danish autonomous territory sparked tariff threats against 8 European NATO allies, including Denmark, UK, France, and Germany, is briefly spooking risk assets and triggering sharp sell-offs in equities. A dip in BTC below 88,000 US dollars and roughly 1 billion in combined BTC ETH ETF outflows as investors rotated to safe havens like gold. Trump walked back the threats midweek at Davos, announcing a framework of a future deal, with NATO Secretary Mark Rutte focusing on enhanced US NATO access for Arctic security, ruling out force and cancelling planned February tariffs. This potentially includes bases or sovereignty pockets in strategic areas, while blocking Russian-Chinese influence. This considered de-escalation fueled a relief rebound, with BTC climbing back towards $90,000. Though lingering uncertainty around deal details, Greenland PM emphasizing sovereignty as a red line, and transatlantic trust keeps macro noise elevated, but selective resilience in fundamentals persist. Bitcoin trading around $89,000 to $90,000, down roughly 5% week over week, clinging to the $88,000 to $90,000 support band after sharp whipsaws. Ethereum at $2,980 to $3,000, down 8 to 10% week on week, testing the $3,000 support as a key floor. Solana, $128 to $130, down 4% week on week, but showing relative strength, up modestly in recent sessions. Total market cap hovers near 3.1 trillion, with continued liquidations in the hundreds of millions weekly, offset by quiet institutional dip buying. No full capitulation yet, more of a grinding reset. Bitcoin holding the line near 89 to 90,000 after reversing from sub 88,000 lows midweek, following volatility tied to macro noise, including the Greenland tariff scare and legislative delays. The pullback has flushed leverage, but structural demand remains evident. Positive tailwinds. BlackRock's IBIT ETF reached $70 billion in assets under management in record time, the fastest ETF growth ever, outpacing gold's GLD ETF by 5 times. IBIT ETF underscores institutional staying power despite recent outflows. Stake and Shake announced a Bitcoin bonus program starting 1st of March, where hourly employees at company-operated locations earn 21 cents in BTC per hour worked. Some Bitcoin advocates see moves like this as a reinforcing idea of Bitcoin as sound money for everyday use, though views obviously differ. Broader state level treasury interest and corporate integration continue to build durable floors. Cautionary notes. Ongoing ETF outflows and leverage flushes have pressured price, with BTC dipping below $90,000 amid tariff geopolitical noise. Greenland related headlines briefly spooking risk assets before de escalation. Realized losses are emerging on shorter term holders, but long term conviction holds. Downside buffered by accumulation signals and policy tailwinds. Ethereum consolidating near the $3,000 support after a steeper week on week drawdown, range bound but backed by staking and tokenization progress. Positive catalyst. BlackRock's filing for a staked Ethereum ETF, iShares Ethereum Staking Trust, advances targeting 70 to 90% staking to deliver yield, validating ETH as Wall Street's tokenization backbone. Staking exceeds 30% of supply, all-time high levels with long queues. Stablecoin market cap tops 191 billion and mainnet activity remains robust. JP Morgan's tokenized fund live on Ethereum plus the Commodity Futures Trading Commission's positive treatment reinforce ETH's maturity. Despite 230 million ETF outflows this period, underlying infrastructure strength supports a floor. Bearish notes. Outflows and weaker ETH BTC ratio add near-term pressure. Lower L1 fees continue to challenge revenue, but still appears supported by range trading. Solana outperforming majors on chain, down modestly week on week but rebounding in recent 24-hour action. Real activity dominating over speculation. Positive catalyst. ETF flows in the 12 million plus range. Tokenized stocks lead the 38 to 39% market share, hundreds of millions in value for Solana. DEX volume strong at 4 to 5 billion in a 24-hour period, and stablecoin inflows reversing prior trends, 1.6 billion plus. Staking ratio at 70% with 60 billion staked creates supply pressure. Bearish notes. Broader market chop caps upside, ETF traction still modest relative to majors despite superior metrics. Now, to the macro and WEF 2026 highlights. Davos, January 19 to 23rd. Crypto integrated deeper into mainstream finance discussions. Tokenization, stablecoins, blockchain convergence front and center with panels like Is Tokenization the Future? Emphasizing practical scale and guardrails. Key moments and quotes. European Central Bank Francois Villeroy de Gallo says tokenization and stablecoins might be the name of the game really this year. Now it's very fashionable. Ripple's Brad Garlinghouse, stablecoins grew from 19 trillion in 2024 to 33 trillion in 2025. Transactions 75% year on year. Very bullish on 2026 all-time high for crypto. Institutional adoption significantly underpriced. Coinbase's Brian Armstrong. Stablecoins as tokenization scaled use case, unlocking access for 4 billion unbanked or underbanked adults. President Trump's special address. I'm also working to ensure America remains the crypto capital of the world. Congress is working very hard on crypto market structure legislation, Bitcoin, all of them, which I hope to sign very soon, unlocking new pathways for Americans to reach financial freedom. Circle's Jeremy Allaire, stablecoins as network effect businesses. Virtually every major bank sitting down to talk about how to implement and integrate this technology. The Greenland episode injected significant short-term whipsaw, risk-off flows hitting alts harder initially, BTC dipping sub 88,000 before rebounding post de-escalation. But Trump's pivot reinforced pro-crypto policy intent amid macro uncertainty. Sticky inflation, rate path delays, tariff geopolitical noise now eased on this front. In summary, infrastructure acceleration amid speculation cooldown, state treasuries, BTC reserves, staked tokenized products, and genuine on-chain dominance building structural support. Near-term volatility may persist due to macro and regulatory uncertainty, as well as ongoing liquidations. At the same time, growing institutional interest, corporate adoption, and policy developments highlighted at Davos point to potential positive momentum through 2026. If macro stabilizes further, expect rotation back to majors. At the moment, a healthy pause in the cycle. Remain calm, zoom out, and stay informed. That concludes your market update for the 23rd of January 2026. See YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.